We need to talk about something monumental that just happened with XRP this week. Now, I know most of the chatter online is all about price spikes and quick gains, but what just occurred has almost nothing to do with short-term pumps. This is bigger. Much bigger. It's about the architecture of the financial system itself, and XRP just quietly moved a step closer to embedding itself into the core machinery of global finance. And I promise, this isn't hype, this is structural, this is infrastructure, and if you pay attention, you'll see why this could change everything for the asset over time. So here's the reality. XRP was officially recognized as acceptable collateral on a federally regulated derivatives platform. Now, if that sentence flew past you because it didn't involve a price chart explosion, I need you to pause and really think about what that means. Collateral is not just any asset. It's what major financial institutions trust to secure massive positions in derivative markets. We're talking about the kind of trust that Gold, U.S. Treasuries, and top foreign exchange pairs hold. These are the assets institutions are willing to bet millions or even billions on because they are liquid, settlement-ready, and stable. You don't just slap a token or a meme coin into that framework. It doesn't happen. This week, XRP got that approval. It's now officially treated as collateral on a derivatives platform regulated by the Commodity Futures Trading Commission. Let me simplify. Collateral is the backbone of leveraged and hedged positions. It's the financial safety net. Without it, the derivative system collapses. The fact that XRP passed muster here means it's now seen as credible, liquid, and reliable enough to be trusted at an institutional level. This isn't a temporary headline. This is an infrastructure upgrade. And here's where most people get it wrong. Collateral status doesn't just influence short-term trading. It changes the asset's role in the system entirely. Once XRP is posted as collateral, it's effectively locked. It's not circulating on exchanges. It's not being flipped for a quick profit. It's held in institutional custody. That tightening of supply, coupled with rising institutional demand, puts upward pressure on price naturally. This is basic supply and demand math, but in a way most retail traders never see. Now let's talk scale. You can't run trillion-dollar derivatives positions on a low-value illiquid asset. The global derivatives market exceeds $1 quadrillion, and the assets that participate need to be capable of handling that kind of volume. Historically, every major asset that became core derivatives collateral experienced a revaluation. Gold, Bitcoin, major FX pairs. Price doesn't dictate collateral status. Collateral status dictates price. Let that sink in. When an asset becomes trusted enough to back leveraged positions, its valuation framework shifts because it must now support institutional demands. XRP's new status means it's now officially sitting on balance sheets. Institutions can hold it, pledge it, lend against it, and integrate it into structured financial products. Think about the significance here. Not long ago, XRP was embroiled in regulatory battles often dismissed as speculative. Today, it's stepping into the core infrastructure layer of U.S. financial markets. That's a complete transformation. Another point that needs to be crystal clear. This isn't about short-term pumps. This is about plumbing. Charts show price, but plumbing shows infrastructure. The derivatives platforms, collateral rules, settlement windows, all of these are the invisible systems that make financial markets function. Retail sees the water flowing in the charts, institutions see the pipes behind the walls, and when the pipes move, price eventually follows always. Being treated as a commodity-level asset changes XRP's narrative entirely. It's no longer just a digital token. It's not a speculative meme. It's not fighting for legitimacy. It's a settlement-ready, liquid, regulatory-compliant asset in the same category as gold, silver, and high-grade financial instruments. Commodity status matters far more than people think because commodities are the assets that underpin derivative markets. If XRP is allowed into that arena, it's a signal that regulators recognize its capability to function at scale, handle leveraged positions, and integrate into structured finance. Let's zoom out for a second. Commodity treatment unlocks institutional adoption in ways retail often misses. Once an asset is recognized as collateral, it can be used for swaps, options, futures, structured notes, repo markets, collateralized lending, and yield-generating products. ETF hype comes and goes, but collateral status is structural and permanent. It sets the stage for repricing. When the system is ready, the asset's price adjusts to its new role. It's not instantaneous, but it's inevitable. There are two macro forces that make this development even more consequential. First, the global economy is drowning in debt. Central banks can't just default, they inflate. They increase the money supply to stretch debt over a larger base. In practical terms, inflation eats cash and fixed incomes alive. If you don't own appreciating assets, your purchasing power erodes. Assets that grow in value or produce yield become essential. XRP, now integrated into collateral systems and ready for institutional adoption, is positioned for this exact environment. The second macro force is the quiet accumulation by institutions. Retail traders often focus on charts, but institutions track flows. Over the past months, we've seen substantial amounts of XRP leave centralized exchanges, moving into institutional wallets, over-the-counter accumulation, and fund structures. These aren't casual traders hoping for a quick win. These are some of the largest financial entities in the world positioning for long-term stability and growth. Their buying is methodical and infrastructure-driven, not speculative. Global dynamics also play a role. Certain foreign markets like Japan are already leveraging XRP technology with regulatory clarity in place. If liquidity strains hit, XRP could serve as a settlement tool even before U.S. legislation catches up. Sometimes necessity drives adoption faster than regulation, and XRP is now positioned to meet that demand. On a broader scale, the economic pressures on labor markets are intensifying. AI competition is rising, wages aren't keeping pace with inflation, and the cost of living is surging. For most people, a traditional job won't protect against devaluation of income. The only security comes from assets you hold, especially those that combine appreciation potential with yield generation. XRP, as an institutional-grade collateral asset, fits squarely into that framework. Here's the bottom line. This week's developments weren't meant to be flashy or generate headlines about price spikes. They were about positioning, plumbing, and long-term structural alignment. Think of it like turning on a faucet. You see the water price, but you don't see the pipes, valves, regulators, and infrastructure that make it flow. Institutions watch the plumbing, retail watches the water. Understanding the plumbing is critical if you want to anticipate the eventual revaluation. The sequence is always the same. Infrastructure shifts first, then narrative adapts, liquidity flows, utility matures, and finally, the market recognizes value. XRP moving into collateral systems is the infrastructure step. Institutional adoption and balance sheet integration follow naturally, creating a foundation for future repricing. If you're only focused on daily charts, you'll miss the bigger picture. But if you understand the framework being built, you can see why price eventually aligns with the underlying structural role. Even if nothing spectacular happened on price charts this week, this is a bullish confirmation in disguise. It's not hype. It's realignment. XRP is now officially positioned inside the global financial system, in the collateral layer, with recognized commodity status, and integrated into the institutional infrastructure that underpins major markets. By the time this makes mainstream headlines, the strategic positioning will already be underway. Liquidity is shifting, debt is accelerating, inflation is persistent, and institutions are quietly accumulating. Retail remains focused on immediate gratification, but the strategic moves are happening behind the scenes. This is exactly the kind of environment where informed patient positioning wins. Emotional reactions to price dips or hype cycles won't get you there. Education and understanding of the macro and infrastructure story are what matter. So to recap without repeating myself excessively, XRP isn't just another token. It's now a recognized collateral asset eligible for derivatives and institutional balance sheets. Commodity treatment unlocks structured finance capabilities. Institutional flows are positioning ahead of public headlines. Macro forces, global debt, inflation, AI labor pressures make appreciating and yield-generating assets increasingly vital. Plumbing moves first, price follows. This is the system quietly preparing for transition, and XRP is embedded deeper into that architecture than ever before. In short, this week's developments confirm something crucial. XRP is no longer just fighting for legitimacy. It has been invited into the core machinery of the financial system. Its role is now structural. Its price narrative will eventually follow the infrastructure story. And if you're paying attention, you'll see why this is more important than any short-term chart spike, ETF launch, or speculative frenzy. Remember, nothing I'm saying here is financial advice. This is education, perspective, and analysis. But if you take a step back, look at the plumbing, understand the macro forces, and recognize institutional positioning, the path ahead for XRP becomes clearer. It's no longer about chasing pumps. It's about understanding the architecture being built, staying strategic, and quietly positioning alongside the institutions shaping the future of this asset. So stay calm, stay analytical, and stop letting short-term noise dictate your perspective. XRP has quietly moved into a structural, permanent role in the financial ecosystem. Recognizing this early is the edge that matters.